Hello folks, you're welcome back. This is Carrie's Trading Institute and this is the weekend commentary for the dollar and foreign currencies. So as usual, we'd like to first of all go to forexfactorycalendar.com because we would like to know what's going on the economic calendar. We are paying attention to high and medium impact news events, and we are paying attention to the day that the event is unfolding, the time the event is unfolding, the type of the event, whether it's going to have a high or medium impact, and the type of asset it's going to have an effect on. So you can see going into the new week tomorrow, Monday 25th of September 2023, we are anticipating a high impact news unfolding on the euro and euro associated pairs by 9 a.m. and we have a medium impact as well around 2 p.m. on the euro assets. Then on Tuesday we have a medium impact around 2 p.m. on the dollar, and we have a high impact on dollar by 3 p.m. as well. So you go through the economic calendar and you pay attention to these high and medium impact news events. Pay attention to the time it's going to unfold. Alright, because I have told you that when you put this in line with the weekly market profile, anticipating to see the dollar form the high and low of the week between Monday, Tuesday and Wednesday, most of the times the dollar will form the high of the week when we are in a bearish week, or it will form the low of the week when we are in a bullish week, and most times it will be around the times that the high and the medium impact news events it's unfolding, because that's when the institutions are going to inject liquidity, all right, to engineer that high or low of the week formation. So you pay attention to the time, the day, the type of impact it's going to have, and the asset is going to have an impact on. While you're doing that, we are also paying attention to FOMC, CPI and NFP days, because we do not want to be in the market when these events are playing out. We do not trade the CPI, we do not trade FOMC, and we do not trade NFP. Okay guys, so just go through all of the economic calendar Monday to Friday, check which of the days you're going to have something that is of interest to you. I don't know the assets that you are trading. You pay attention to that and you document it in your trading journal. Then we go down to the dollar index and analyze the dollar, because the dollar still remains our benchmark asset for dollar associated pairs. So we would like to analyze the dollar first before we go about trading any other foreign currency. All right, and I've told you guys that the dollar has an inverse relationship with foreign currencies. All right, so if the dollar is bullish, we anticipate to see foreign currencies go bearish, and in a week where we have a bearish dollar, we anticipate to see that foreign currencies will turn out to go bullish. Okay, so this week, just like the previous week, you can see that on the monthly time frame we are in a bullish order flow on the dollar index. The current institutional order flow is bullish. All right, price has repriced into a premium mitigation block, then repriced into a discount fair value gap, or you can call it the buy side imbalance, sell side inefficiency. All right, give us some level of accumulation, then swept all the liquidity residing below the relative equal lows here. This was manipulation, and now price has been taking out the previous highs of the previous 2 to 3 months. All right, we see the current price action sweeping all of those highs, telling us that the current institutional order flow on the monthly time frame is bullish, and we outline our drawn liquidity to be the relative equal highs here. All right, that will be our drawn liquidity on the monthly, and 50% of the sell side imbalance buy side inefficiency here is also our drawn liquidity. Okay, that is consequent encroachment, and we are also looking at the bearish order block here, the last buy candle that was traded through by 2 consecutive sell candles. All right, closing below that buy candle, that is a bearish order block. Institutions will usually reprice into that level because that's an institutional level, and by the name order block means that there are a lot of orders residing at this level, and this is also confluencing with a volume imbalance like I outlined the previous week. You can see the gap in between these two candles, this and this. You can see that there is a gap in between the body of the candles, not the candle wicks this time around, the body of the candles, leaving only the wicks trespassing between each other. Okay, so when you see this, we call it volume imbalance. So the institutions are heading for all of these levels that we have outlined. Then we refine our analysis into the weekly time frame, and on the weekly time frame we are also looking at those levels, the relative equal highs or the symmetrical highs that were formed here. You can see the first, the second and the third here, and looking like a trend line formation. When you do this, you would see that this was previously a trend line. Okay, and we see this as diagonal liquidity because the institutions will sweep on all of those highs there because they have a low resistance liquidity. They are a low resistance level, so we see a lot of liquidity residing at those levels. All of those previous highs, there was a buy side liquidity pool residing there. Okay, and you can see that 50% of that monthly sell side imbalance is also a fair value gap on that weekly time frame. Okay, or you can call it the sell side imbalance. You can see the last low of the sell candle here, the high of the sell candle here. This is a sell side imbalance and a buy side inefficiency. All right, so the institutions would like to rebalance this inefficient price action, okay, before we look for signatures to either continue bearish to trade into the bullish mitigation block of the monthly time frame like we have already outlined. Okay, but currently we are bullish because take a look at the weekly time frame. In about 5 to 7 weeks, you can see that the weekly candles have been taking out the highs of the previous weeks, respecting the lows of the previous weeks, except for situations when price is going to retrace. Otherwise, in a bullish order flow, we like to see highs respected, and in a bullish order flow, we like to see highs being breached, but the lows are respected. In a bearish order flow, we like to see that lows are being cleared and the highs are being respected. Okay, guys. So this week again, we are still bullish. All right. However, because we've already had a bullish expansion. And for every expansion that takes out an external range liquidity, there is a high tendency that price is going to retrace into internal range liquidity. Okay, so we will be careful enough, but we like to see what price does on Monday. If we have a gap open lower, it tells us we are going to anticipate a bearish week. Okay, however, price may trade up between Monday, Tuesday, and Wednesday to form the high of the week, especially because this is close to the previous old high here. And in situations when you see this, that current price is close to a liquidity level, either buy side or sell side, all right, most of the times institutions will trade into that level first before they start looking back into the next liquidity, whether internal or external. But in this case, we like to see the dollar reprice into internal range liquidity level. Like we can see here, we have a bullish breaker residing right here, and we have when you use your Fibonacci between the low to the high, you can see that we would like to see the dollar reprice into at least 50% of the range. Okay, 50% of the range, or price might as well just trade into this bullish breaker. You can see the last buy candle before the sell here, price takes it out. So this level is of interest to me. Price might trade back into the bullish breaker before it heads into the other draw on liquidity. Then on the daily time frame, we are paying attention to market structure on the daily time frame. We like to see clear higher highs and higher lows, and of course price has been forming higher highs, higher lows like you see here. All right, price has been forming higher highs, higher lows. You can see for every higher high, price retraces into internal range. You can see here fair value gap or institutional order flow entry drill. Like I taught in the previous video, if you haven't watched, go back and learn. You can see the fair value gap with an old wick in between. Price retraces into that level. That's institutional order flow entry drill. Gives us another expansion. All right, order block with a fair value gap is the most valid order block. Price retraced into that fair value right here. You can see that the body of the candle respecting the fair value, okay, and price is heading again for those levels like we have outlined. All right, so on the 1 hour time frame, we are bullish until we see price trades into this level. So you can see even on the 1 hour, we have a current buy side drawn liquidity here. All of these relative equal high. You can see that there. So I would like to see the dollar trade into that level on Monday, going into Tuesday and Wednesday. Okay, let it clear that level and possibly even trade into the other drawn liquidity on the daily before we start looking for that retracement into the bullish breaker, right, of that weekly time frame that we have outlined. All right, guys, so once this happens, price clears out the high, clears out this high, and it gives us a shift of market structure on the 1 hour time frame. All right, whether it's a mitigation or breaker that leads to a shift of market structure, we like to sell the dollar into that weekly time frame breaker block. All right, or price creates a mitigation block before it gives us the shift of market structure. We still will anticipate the dollar to go lower into that weekly time frame breaker block. All right, so once we do this, we're going to go to check GBPUSD, because that's the foreign currency that I like to trade, but it's not like a template I'm giving you. You can choose to pick any other currency pair, all right, that you like to trade. So let's go to the weekly time frame or the monthly time frame as well. Just have a quick look on the pound dollar. So you can see that the pound dollar is bearish currently. You see that price has traded into that premium breaker block like we see here. All right, price has traded into that level, and price is currently piercing for the drawn liquidity. As you can see, in the last 3 months, the GBPUSD has been clearing the lows of the previous monthly candle, and this tells us that we're in a current bearish order flow on the GBPUSD, especially on the monthly time frame, and the draw on liquidity has already been outlined. You can see it here. All right, the relative equal lows right here, that's the draw on liquidity. This also, the gap in here is the draw on liquidity on the monthly time frame. However, we are currently in a bullish order block. You can see this, the last buy candle that was traded through by 2 consecutive candles. We like to measure 50% of that bullish order block. That is order block mean threshold. Okay, 50% of that this order block candle, that will be the order block mean threshold. This is 50%. All right, you can use either the body of the candle or the wick of the candle of the other block. So let me try using the wick of the candle, whichever one resonates more with the current price action. That's the one you should be using. So I will go with the wick of the candle, and I'm going to outline 50% of that order block. All right, so if price trades to that level, should price trade to that level, we might start to see a little bit of retracement here, a little bit of retracement on the GBP, while the dollar is retracing into the weekly bullish breaker. We'd like to see this guy also. This guy might start retracing a little bit before it continues bearish. So on the weekly time frame, you can see that this has been bearish. Okay, price has been clearing previous weekly lows and respecting the highs. That tells us that we are in a bearish order flow, and the drawn liquidity is being traded into this low here. Was our drawn liquidity previously, that old low. So price has traded into that. It has taken out external range liquidity. All right, you can see price is heading for volume imbalance right here. It's already outlined. The volume imbalance here is also a drawn liquidity. Okay, so going into the week, as price opens, price might trade into this volume imbalance or the fair value below it here, tap into that fair value and start to retrace into internal range liquidity. You can see between the high here the last high here to the low, for example, somewhere around here, 50% is this, and we have a fair value gap around that 50% and another fair value above 50%. So we like to see GBP at least retrace into that level in the next 1-2 weeks, retrace into that level before we continue bearish. All right, but if he chooses to still trade bearish into that drawn liquidity, no problem. All right, we are waiting and just waiting to see what price is going to do, or the institutions should show us where they are heading to. On the daily time frame, market structure is bearish. Price has been forming lower low, lower highs. Okay, lower low, lower highs. You can see the draws on liquidity. You can see that volume imbalance is confluencing with a bullish order block on the daily, and you can see the relative equal lows here. That's a drawn liquidity. You can see the buy side imbalance, sell side inefficiency here. That is also the draw on liquidity on the daily time frame. Okay, so now we have another lower low that has been formed because external range liquidity has been taken out. The normal thing is structure would like to form lower high, okay, either around this level here or around that level before we continue downwards. Okay, so how do we know we are going to go up? Once we see a shift of market structure, once price trades into this level and we see a shift of market structure on the 1 hour or 4 hour time frame, it tells us that this guy is going to start retracing, and once it's done retracing, we can continue selling into higher time frame drawn liquidity. Okay, I just hope that this is really well explanatory. You can see on the 1 hour that we are heavily bearish. We are also close to the Friday low here. So as the market opens, even if it gives us a market open or a gap open high, price will trade below this level, might trade below that level into this level we have outlined before that shift of structure between Monday and Tuesday, and we will buy GBP while we are selling the retracement on the dollar. Okay, but if the market does otherwise, I mean if it opens and just starts to retrace into that level without trading into this level first, that is totally fine. Once it does that and gives us that retracement, then once they are done with the retracement, you can see on the 1 hour, I'm looking at this level for that retracement. All right, that that bearish breaker here. Okay, price swept the high here before the shift of structure here, so I'm looking at that level. Price might just trade into that level to form the high of the week before we continue selling as well. All right guys, so let's see if this guy is looking something interesting. You can see it's confluencing with that bearish order block of the daily time frame, so this makes sense. This makes a lot of sense. Once that happens, we can start selling the pound dollar as well, while we continue the bullish trend on the dollar until we reach the drawn liquidity on the monthly and the weekly time frame like we have outlined. Guys, I hope that this commentary is educating you and you are learning something from it. All right, if you are learning something, don't hesitate to like the video, comment in the comment section, let me know your thoughts about the videos that you're receiving here for free. Also do well to subscribe to this channel, and for those of you who can, you can as well join us in the VIP mentorship program. It's just I think it's about $150 now. All right, so I wish you all the best as this week trade unfolds. I wish you all the best. Good luck, good trading, stay safe.